There is a major shift underway in the global oil markets tonight, and it may not look dramatic at first glance, but it has consequences that will travel far beyond the Gulf and land directly in economies like ours. The United Arab Emirates has decided to leave OPEC. Now, that may sound like a technical decision, something that belongs in the world of energy policy, but in reality, it tells a much bigger story. It tells us that the system which once helped manage oil prices is beginning to loosen. And when that system weakens, the market becomes harder to control. For decades, OPEC has worked on a very simple idea. A group of major oil producing countries would come together and decide how much oil to produce. And by adjusting supply, they could influence prices. Less oil meant higher prices, more oil meant lower prices. It was not perfect control, but it brought a degree of stability to the market. This is the map of the countries who are currently in the OPEC, and as you can see that they are a combination of big countries, important players like Saudi Arabia, Iran and Iraq, and some smaller oil producing countries. Also, the composition of the OPEC has continued to change over time, which I will discuss shortly. Now, this is what the system looked like, a group of producers spread across the world, but heavily concentrated in the Gulf, acting together to influence global supply. Now, for example, this slide tells you exactly what kind of control we are talking about. The main objective of OPEC was, of course, to ensure that with the control over the supply of oil, they could ensure stable prices or profitable prices, however we want to look at it. It was originally founded in the 1960s, and currently it controls about 30% of the global oil supply. This has also changed quite a bit from where it was, and that is something that we will, of course, talk about shortly. Now, as I said, that the OPEC was created in 1960 to exactly do what I talked about: coordinate production, stabilize prices, and give producers control over the market. There was a time when it controlled more than half of the world's oil supply. Today, that share has slipped much closer to what I just mentioned to you, about 30%, and even that influence is now under pressure. So, even before today's development, the system was already changing. The UAE's exit has to be seen in that particular context. This is not a marginal player who is walking away. This is one of the countries, one of the few countries with significant spare capacity, capable of pushing output close to 5 million barrels a day. But for years, this was constrained by OPEC quotas. Now, for example, if you look at this, this is currently what the UAE was producing, 3.3 million barrels per day with the quotas that it had. The full capacity that UAE has is 4.8 million barrels per day capacity. But if you look at the production of the countries in the OPEC, the important countries, you can see how Saudi Arabia is by far the largest, then followed by Iraq, Iran, UAE, Kuwait, Nigeria, and Libya. So Saudi Arabia, of course, remains the most important player and the de facto leader of OPEC. Now, here's how it matters. The UAE produces over 3 million barrels a day, as I said, and the capacity which it has is much higher. That spare capacity is what gives OPEC its flexibility. So when a country like this steps away, it is not just leaving the group, it is in some ways taking that flexibility away with it. Or in simple terms, one of the key hands controlling the tap has now stepped away. But this is not just about one country. OPEC has been under strain for some time. Countries have left before, trust within the group has weakened, and there have been growing friction even among key members over production and long-term strategy. What you are left with now is a narrower group. Saudi Arabia is at the center, then Iran and Iraq are major players, and a number of small producers who rely on the group for collective strength. What you're seeing here is not just a smaller CPEC, it is also in some ways a more limited one. At the same time, the world around OPEC has changed also. The US is now the world's largest oil producer, and it is not part of OPEC. It does not follow quotas or coordinated decisions. Its production responds to market signals, to prices, to private investment. That means a large portion of global supply now sits outside any collective control. Then there is Russia. Russia works with OPEC through what is called OPEC Plus, which coordinates production levels instead of complying with strict quota levels. Therefore, it is not bound to any group commitments and discipline. It has its own strategic interests, and in the current environment, it has benefited from higher prices. So while it cooperates, it also operates independently. Now, put all of this together, and the picture becomes clear. Oil is no longer managed by a single group. It is influenced by multiple players, and each acting in their own interest. Now, add the current conflict in the Gulf to this already shifting landscape. The situation around Iran has disrupted one of the most critical energy routes in the world, the Strait of Hormuz. At one point during the crisis, production from key Gulf producers dropped sharply, not because they didn't want to produce, but because they could not move the oil. Pipelines to the Red Sea and to the Fujairah offer some relief, but they cannot replace the scale of maritime flows through Hormuz. So the market reacts instantly. Prices rise, shipping slows, insurance costs climb, and uncertainty spreads. In the past, OPEC could step in and try to stabilize the market. Today that ability is far more limited. The market is no longer reacting to primarily to decisions. It is reacting to disruptions. So what does this mean going forward? It means the market becomes more volatile. Prices will move more sharply, both up and down, because there is no longer a single mechanism that can smooth these movements. Saudi Arabia and a few others may still try to guide the market, possibly in coordination with Russia, but that influence is limited than it once was. What we are moving is a system where oil prices are shaped less by coordination and more by competition, conflict, and individual national strategies. And that brings us home. Because for countries like Pakistan, this is not an abstract shift, this is immediate. Pakistan imports energy. It is exposed to global price movements. When oil prices rise, impact is felt quickly. Fuel becomes more expensive, transport costs increase, electricity becomes harder to manage, and inflation begins to build pressure. And in a situation where prices can spike suddenly, not gradually, economies like ours do not get time to adjust. They absorb the shock in real time. So the story tonight is not just about the UAE leaving OPEC. It is about what that departure represents. A move away from controlled oil markets towards contested oil markets. And that has consequences because when oil stops being managed by a few and starts being contested by many, the system becomes less predictable, more volatile, and more vulnerable to shocks. So the bottom line is very simple. The world is moving from controlled oil markets to contested oil markets. And that means more uncertainty, more instability, and more pressure on economies like ours.